Welcome back to Investing with Daddy. So today I'm going to take a quick look at real estate. Trump has implemented tariffs on Mexico, Canada, and China. As you can see on the screen, Trump says a little disturbance from tariffs is okay, and this is causing people to think that the Feds will cut more rates, will cut rates faster. There's a story from Forbes that I was checking out. So investors now expect more interest rates cuts this year as fears rise of tariff-driven economic slowdown. So the so people are expecting three rate cuts this year, which at first we were expecting only one rate cut. So here we go, investors now price in three 0.25 percentage point cuts by year's end in most likely scenario, which will send the target federal funds rate down from 4.25% down to 3.5 to 3.75%, which this is good for real estate because home sales have dropped a lot. We People are buying 2 million less houses per year since 2020. So back in 2020, the peak was 6.6 million houses sold by January 2021, and now we have dropped to only 4 million houses sold. So the in the Fed's cut rate, that means the 10-year bond will go down, which in return that means mortgage rates will come down and people will be able to afford mortgage payments easier because right now the 10-year bond is very high because the Federal Reserve they are paying a high interest rate because the Feds must keep our rates high to bring inflation down. But with these fears from Trump's tariffs, inflation will come down because people think that items and products will become more expensive, which in return that will cause the Federal Reserve to cut rates. Like we said earlier, they are pricing in three rate cuts now because of Trump's tariffs. So a stock that I've been looking at for a few weeks now is Whirlpool. So Whirlpool, it's basically a stock based of home sales. So when people are buying houses, that means people are buying appliances, and builders like D.R. Horton, they will buy appliances from Whirlpool, like washing machines, fridges, dryers. So as you can see, the stock of Whirlpool is down by like 64%. Let me make sure. Yeah, 64% since May 2021, which that's crazy. And it makes sense because rates since 2021 have gone up, which means less and less houses are being sold. Let's check out their finances real quick for Whirlpool. So in 2020, they were making $3.8 million by 2020. By 2021, it went up to $4.4 million in profit. And then since then, it has come down. 2022 was 23 million. 2023 was 3.1 million. And of December 2024, which was like 5 months ago, 2.5 million. And I'm thinking if the Feds cut rates, that means that the stock of Whirlpool will do very well because people will begin buying homes. And also Trump wants the Federal Reserve to start cutting rates. Like that's his main focus. Let's see if that can happen. Also, Whirlpool pays a very good dividend. The safety is kind of low at a D minus. Let's see, that's a low. Yeah, so it's a D. Safety growth, it's a D, but the yield is an A, and they are paying 7%. Also, another stock that's for real estate is D.R. Horton. D.R. Horton, they are a home builder. They build homes, and since rates will probably come down this year, I think D.R. Horton will do very well. Let's put up their stock chart. So D.R. Horton, I wonder if they pay a dividend. Let's find out. So it's a small dividend of 1.27%. Their growth is B plus and consistency is a B minus. Let's check out the Horton stock chart. So DR Horton, they are down from September 2024, so the past like 6 months. It is down 36%, which that's a substantial amount. But if the Feds do cut rates, that means the home builders will do better. They will have better earnings, and the stock should begin to go up. The RSI is very low right now, it's at 30. This is where you want to buy, and this is the 1 week chart. So the farther out you go on the chart, the more likely the stock has bottomed out. These prices, in my opinion, this is not financial advice, but it's a good time to buy Jar Horton and Whirlpool. Whirlpool, the RSI is also very low, so the RSI is heading back down to 30. When it hits 30, it's time to buy. Here it hit a low of 18, but it should hit 30, and the price of Whirlpool should come back down a bit more, and there's a big line of demand at $84, 84.10. Also, let's look at 10-year bond. So 10-year bond, this, so on average, on average, a mortgage is 30 years, but what people don't really know is that the average mortgage is kept only between 7 and 10 years until people refinance that loan, or they sell a house and buy a new house. So a 10-year bond, it looks like it topped out. It hit a high of 5%, 5.04%, but it is coming back down. And like we said earlier, with the terrorist fears and Trump putting pressure on the Federal Reserve to cut rates, the 10-year bond will decrease, which in return makes mortgage rates decrease, which Whirlpool and DR Horton should do very well. Let's check out also. So there are some important events this week. So this week we do have unemployment rate. Let me put that tab up into calendar. So here we go. So Friday will be the 7th. So let's go down to the 7th. So Friday the 7th. So the red folders are very important. So the CAD, that's for Canada. So the USD, the US dollar, USA. And here we go, non-farm unemployment change and unemployment rate. This is very important. So the forecast is 4%. If our unemployment rate comes in higher than 4%, that's good, because that will put fear into the Federal Reserve, and they will probably cut rates. And now, since there are three rate cuts priced in, Jerome Powell will see a higher unemployment rate and will probably likely cut rates. Jerome Powell does speak in a few weeks, like in 10 days. So let's see what Jerome Powell says. But yeah, to summarize, I am optimistic that the Federal Reserve will cut rates and mortgage rates will drop down, which in return will make DR Horton and Whirlpool go up. And at these prices, Whirlpool is paying a good dividend, 7%. So let's see if the Fed's cut rates. Yeah, guys, so tell me what you guys think. And don't forget to like, comment, subscribe. Thanks for watching.